Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 2nd of June. I'm Daniel Lam, your host for the podcast. I'm pretty sure you've read many reports about the outperformance of Euro area equities versus US equities this year. But I'm not so certain if you're aware that the US Economic Surprise Index has been outperforming the one from the Euro area for the last few months. Now, just to make sure that we're on the same page, the Economic Surprise Index measures the actual economic data versus the expectations. Now, the more the actual data outperforms expected, the higher the index will rise. So therefore, in layman's terms, the US data had been outperforming expectations more so than those in the Euro area. So clearly, US equities underperformance is due to investors' concerns about the effect of trade war on the US economy, while they have been giving the benefit of the doubt to Euro area equities because of the fiscal stimulus and the reflation story. But the positive factors on US equities is getting a little bit difficult to ignore. We have the de-escalation of trade tensions, and we also got encouraging earnings overall from the US equities mega caps. On the other hand, the European reflation story has been losing steam. The survey data towards the end of May was weak. In fact, the Bundesbank's weekly activity indicator, which has some fit with German composite PMIs, dropped to its lowest level since 2022. And overall, the Euro area inflation data in May has been on the softer side. So this supports our overweight stance in US equities versus Euro area ones. As explained in our podcast last week, we see the post-drawdown peak to exceed the initial peak slightly. When the market manages to break the initial peak level again, you would expect selling from those that have held onto their stocks because they have achieved break-even when they were buying around the initial peak. That means this time around, S&P 500 can just exceed the previous peak at 6148, and a likely psychological level would be around 6,200, where the index will be meeting a breather there. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the